Ouch. Welcome to the closing beat, everybody. Happy Thursday. It is Thursday here. Where's it at where you're at? Everybody good? Just playing around, trying something different here today. Bear with me. Thank you for watching, by the way. Oh, still so odd to look so far away, man. That's weird. Welcome. It is Thursday. We have Wine and Wealth here tonight. I do want to bring that up because Wine and Wealth tonight, we're going to focus on your financial blueprint. We had used the whole month of September to try to focus on retirement, those of you in or near retirement, and there's been so many cool things, so many changes. So last week was kind of an impromptu class. All the changes that you have coming up with all the tax laws, those that are going to get passed, those that are not going to get passed and stuff. We went over all of that, the RMD changes, what you can do with your IRA, so many cool tricks there that you can do with your IRA, assuming that those pass. And so I went through the legislation there to share that with you. I look forward to what they decide there. Finally, some good things coming down the pipeline. So we're going to cover that tonight. That'll be at 8 o'clock. Hope you'll join me for that. And with the markets off to the right-hand side of your page, we're officially through, or halfway through September. Remember, September is historically the worst month of the year as far as the markets go, right? It has the worst drawdown, it has the largest drawdown, has the least amount of time that it's been positive, whether you look over 100 years, 50 years, or the last 20 years. So I've shared that in our notes from Jazz if you want to check that out there. This month has been no exception. I wish I could say otherwise, but there's been no exception. This month of September has been pretty brutal. It started off okay, erased all of that, and now almost working on erasing more than that. That's a tough one there. The bad news is, I got bad news for you. The bad news is that the second half of September is almost never positive. Meaning if you broke September in pieces and you said, let's just measure the first part of September and let's measure the second part of September after the 15th to the end of the month is historically only positive 40% of the time. Those are not good stats. You would not bet on a horse that wins 40% of the time. You would not bet on a game or something like that if you're into that sort of thing. The median loss for the second half of September is about 0.5%. It's 0.49% if you're interested in that. Where are we at? We're right at a major support area that we're looking to see if it holds or not. The trouble is so you know how we break down sometimes, we'll say, how does a particular event tend to perform historically? We're looking for ideas and thoughts. And then we'll say, what if the year was already positive and then we hit this Labor Day week or the last 3 months of the year? Well, how does the market perform then? So what we did is we said, what if the year was already down and we want to know how the second half of September performs? Well, it doesn't get any better. The median loss is minus 1.92%. So figure the median loss is about 2% in the second half of September when the year is already down. You happy over there? It's all good? It's good? Okay.
Yeah, Chris made a great point. It made me laugh.
These YouTube titles, yeah. Oh, you would absolutely bet on a horse that wins 40% of the time? They race 10 horses at a time? Those are great odds. Oh, is it? The sports, I want to go with the sports gaming one. Yeah, I don't want to go with the horse anymore. I changed my mind. Okay, so yeah, you got a good point there. The betting man over there got a chuckle out of that. That's cool. Man, so the point being, the second half of September is probably not one that you want to bet. Somehow this year is different. You have everything leaning against you in that one there. One other thing I'll point out real quick, even if you look through the last bull market, go back through that 10-year bull market there, the last half of September, or I should say the second half of September, was only positive 3 times. So I don't know what it is about this time of year. Median loss was about minus 1%, and so you just want to keep that in mind. Now, if you go, stats, I don't believe in those stats, okay. Let me throw one more at you then, right? Tomorrow's options expiration day, right? Have you noticed that this year, and in fact over the last 12, 13 months, options expiration day, normal monthly options expiration, has been really nasty? Anybody? Any options traders out there notice that? Well, I love options myself. I love studying these things. And if you were to study that over the long run, you would find that options expiration day is neither bearish nor bullish. There's no strategy there. And that's okay. Like, so I'm saving you time if you want to do this. The average loss, though, over the last 12 months leading up to the Friday options expiration day has been minus 1.2%. So that's odd. Typically, it's about flatline. You got winners, you got losers, but it's about flatline. If you cut out all that and you say just the last 12 months, it's been pretty brutal leading up to options expiration there. Only 2008 and 2009, by the way, were worse. So you really got to go back. And you notice how many of these stats I'm giving you that show 2008 and 2009 were the only other times we saw this kind of nastiness, this kind of volatility, this kind of back and forth and things like that. So anyways, that's kind of interesting. I do want to point out that just for fun, looking forward after options expiration, just look the week after, the average gain is 1.38%. So it almost seems like people are, well, obviously repositioning their bets, and then all is clear the next week. So maybe next week is a lot better for us. I don't know. I am going to pull more data of that for you and share it in our notes from Jazz. That is our weekly email that we send out to clients and research members. So just be on the lookout for that, because I'm going to get a little bit more detailed there if you're interested in that. Now let's talk about the S&P here. I'm going to go to the charts so you can see we're in a very precarious position here. Where are we? Flirting with breaking this low. Remember, there's only two spots we're looking at in the market right now. It doesn't matter who you are, where you are, what you care about. You're looking at here, or you're looking at there. Well, we're nowhere near there. We can't be in the same place at the same time. So what's it look like? After hours even, it looks like we're pushing lower. It looks like the pressure is to the downside. And think about this. After the week we've had, who's going to want to wake up on Friday, tomorrow, with no real news? Let's assume there's no real news that comes out. Who's going to say, today's the day. I'm going to buy today on a Friday before the weekend. The Friday also happens to be options expiration in the middle of September. So you see all those things leading up there? So it's definitely a sit on your hands type of event where we stand right now, just to give you that heads up there. What else do we got here? Let's look around the markets. So as far as the S&P goes today, very difficult to get anything done. I hate to sound like a broken record, but this is what we have. Microsoft about to break to new lows there. Amazon was weak on the day, right? Try to do it where you don't get bothered by that. Tesla had a little up day, right? It's trying to break out. Over the last week, Tesla has shown incredible relative strength. There's no doubt about that. That should be pretty easy to spot for you. I do want to point out Netflix trying to wake up there. The chart looks a little bit condensed because of how far it's fallen, but there's not much more you can do with that. Also, big stocks here. We've got Apple. It's a new keyboard. Apple reversing course, making new lows here in the short term. The action really was over in the healthcare space. This is thanks to the two healthcare conferences going on right now. You got United Healthcare, AbbVie. We'll talk about some of these in a little bit. Bristol Myers, all of them were presenters. All of them had a focus. Others as well. Cigna was in there, I believe. Yeah, it's almost about to make new highs. So if you look at, say, the XLV, that's your healthcare. It's not a trending sector right now, but that's showing relative strength. I keep pointing that one out there. In the financial space, you've got the big guys, your JP Morgans, stronger on the day. Let's try to do this here a little more organized. Bank of America, strong on the day. Wells Fargo, big banks were stronger on the day. The more popular regional banks, I don't know how many of you like that. I'm really just taking shots in the dark while I'm talking with you here just to see what you're interested in. I don't have to point these things out, but PNC Bank, all of these coming off their lows, focus on USB Bank, SIVB Bank, names like that. Elsewhere, consumer staples, little bit. Philip Morris, love him or hate him, right? Altria, love him or hate him, just a little bit there. General Mills. There you go. Otherwise, very strong stock there. I would mention that even Kellogg finding itself not selling off as much as the market, but also very extended here. What's that tell you? That tells you that the extension, we're getting close to the end of the selling. I don't know where it bounces or how much it bounces, but something to point out there. And moving over to utilities, everybody's favorite sector, right? Utilities have been strong, second strongest sector in the market so far this year. Not today. Brutal pullbacks in a lot of these stocks as they come off of their highs. Is that a buying opportunity or is that a reason to run away? WEC Energy, very interesting there. Con Edison, which just made new highs the other day, reversing course, maybe giving you a little pullback opportunity there. And lastly, I want to point out oil. So oil down pretty nasty here today, about 3.8% or so. Still in the midst of that downtrend, still very difficult to try to assume that that is going to be the bottom of the downtrend. I take that one seriously, right? You won't catch me often wanting to fight the trend in the oil space. But look around at some of the names that just had bad days, Chevron and the like. All right? So wanted to just point that out for you. Okay, a couple other things. Notes. Or we can look at bonds here. I'm going to use the notes to look at this here. The bond markets have now pushed the 30-year mortgage over 6%. Is there anyone who can say they've seen that? I can, but, I'm not trying to pretend like I'm that guy, but let's see what we can do here. 30-year mortgage. I'm going to try to get this on the screen here for you. I don't know if it's going to show right. I might have tinkered with this too much. There's your 30-year mortgage rate. That's the national average. Actually, it's going to be up a little bit more today. 6.02%. That is higher, or almost as high, as the 2008 time period in here. Here's 2008, right before the crash. Bankrate.com reported 6.2% yesterday, with no real end in sight there. Now, you go back to 2007, 2008 levels, pre-crash there, to find mortgage interest rates that are as high as that. Now, remember, you can't say mortgage rates are this high, therefore they're the same as 2008, therefore we're likely to come towards a crash there. Remember if you go back that far, remember the mortgage market, it was like if you were breathing, you got a loan. If you were breathing, you got a triplex loan. If you wanted it at the same time, you could refinance and cash the whole thing out if you wanted. Those were wild times. Credit standards are much tougher this time around, so you can't predict a crash. You could predict a pullback for sure in housing prices. I'd have no problem with that. It still doesn't solve for the fact that mortgage debt is at the highest levels that they've been in a generation. That's going to weigh. That weighs on prices. You got to imagine that. So that's a difficult one there. But I did want to point out for the home shoppers out there, it's going to cost you a little bit more. So, negotiate a little bit. Find yourself a deal if you can find it. Also, you might have seen in the news the rails, the rail strike. We got a handshake deal there with the old rails. That's a good thing because the thought there is, I'm trying to pull it up for you. The thought is that if there were a rail strike, which would have been midnight tonight, that coal supplies would have been interrupted. And that would have started a gas switching process. Anybody familiar with that? Now, the deal is good news. The fact that they got at least a handshake deal there is good news because natural gas storage, I'm sorry it's not showing up perfectly. Try to do this a little better. That's a little bit better. We're trending below average with national gas storage here in the States. Earlier in the summer, we were trending 2% above the average, and we've since fallen 5%. Now we're back down just 2% there. We don't have the same issues as Europe right now, so we're kind of thankful for that. Not at the moment anyways. But here's the problem. So do you follow natural gas? Do you care? Freeport, remember they had a fire. I think we talked about that earlier in the year, one of their factories, so their production's offline. Well, what happens there? As they come back online, right, we get U.S. prices of natural gas pushed higher, right? Think about that. Creates an arbitrage between the price of natural gas in Europe and the price of U.S. natural gas. So that could have really widened that spread if the rails were going to have issues striking and delivering coal and stuff like that. So there was a lot under the surface. I don't know if you saw, you can always tell how serious people are taking the news by looking at the underlying instrument. So if we look at like UNG, right? Yesterday, big move, higher prices. We're ready to go. We're going to have this strike. It's all good. Today, handshake deal strikes over. We're right back where we started, right? So there was about to be a wide divergence in the price of natural gas across the whole world, which would have just created arbitrage for traders, make a bunch of people rich and all that stuff, and we would have been having those discussions of how to play along with that. But thankfully, that is not the case. Hopefully, that holds true. All right, stocks in the news. Let's move on over here because that's what we do. If you're willing to do it with me. First up, Adobe. There you go. Cody told me about this earlier in the day. Adobe is buying Figma for $20 billion. Do you know Figma? Any graphic designers out there? Pretty cool platform and is essentially Photoshop, maybe Illustrator's competition. What? Right? You're taking that completely out of the market, now putting it under their umbrella where they're going to be charging for it. The stock is down today because this is their largest deal ever. They're paying $20 billion. So some people are going to make some dough off of that one. And, was that a bingo word? Dough? Okay, I gotcha. I'm just trying to help them out, man. So largest deal ever. That's a lot of money to be paying for that when they already have the product. So this is a buy. Well, it's perceived to be a buy because you know they're taking market share there. What else do we have? Walt Disney. Lots of good things going on. Walt Disney. So they presented at Goldman Sachs's Communicopia event. That's a horrible name. But basically they said, we have the opportunity to buy the rest of Hulu from Comcast. Remember, we talked about this earlier in the year. And they very much want to do that and integrate it into their Disney Plus. They also said that their theme parks are not seeing any signs of issues from the environment, from the economy, where people are still booking out. They still have more reservations than they have capacity. In other words, the parks and everything are as busy as they humanly can be. Nonetheless, the stock was down just a little bit. Why is that? Because in order to get Hulu free and clear to themselves, they're going to have to pay, right? Going to have to spend some money on that, so sliding some numbers on a balance sheet. All right, PayPal's in the news here today. The CFO left. That was basically it there. Not too bad. I think the stock would have been down anyways, just a weak day in the stock market. Best of luck to the CFO because I believe it was health issues related. So let's see. Hopefully all goes well there. Instagram's not going to be accepting what is that? They're not going to be accepting payments in their chat application. I thought that was a done deal at one point. That would have been rather clever on their part, probably because they can't have their crypto coin, which they really wanted to have. And I don't know if they're going to try again. So we will see. And also Humana. So Humana presented at the healthcare conference, JP Morgan's healthcare conference there, and they raised their guidance dramatically. So this was a chance to hear directly from leadership. Obviously, that was strong there. This was also a stats play yesterday. I obviously had no idea this was going to happen. We spent some time talking about this and how it tends to rally over 3% and all that great stuff. I had no idea that would happen, but that's awesome that it did. And there's no way you could have participated in any way on it after hours. I don't think anybody would have, so I don't want to take credit for that, but very cool for them and almost back to highs. This would now be, in the short term, this would be the strongest stock in the healthcare space if you are curious and or interested in any of that. Awesome. I think I've done it. There. Brent, no tip of the, fact of the day. About Disney. We don't do it when Disney's down. They got to earn it. Are we going to have a Scanlon sighting tonight? Nope. Eric has something better planned for you. So if you're a client, we're doing a Wine and Wealth tonight. That'll be me. I'm going to help out and do that one there. I got a couple really cool things to go over. But tomorrow, we're going to post a video that's an interview about Medicare, healthcare, how to handle your costs and stuff. What are all the little tricks that you can do if you retire prior to taking Medicare? How can you save money there? Talking about the exchange and all that great stuff. So a really simple breakdown of how to make a little money and obviously save a bunch of money on something that is ridiculously expensive. Giovanni says, how do you believe housing market can go 10-15% more? Could the housing market fall? Yeah, regionally, absolutely. Not, I don't think, nationally. Yeah. The buy the dip cloud is throwing in the rag tomorrow. You gotta assume there's going to be some people that see that area break and decide they'll take risk on a different day. Why do you say sit on hands if we're at the bottom range of the S&P and the other indices? Is this not a good time to accumulate? I'm saying that this very moment is not a good time. The process of pulling back, love it, right? Your dollar cost averaging. However, if you see that we break tomorrow and we start selling off on that excess pressure and now we're below the lows there would be just no hurry in my mind to feel like I was going to miss out on a discount. I just wouldn't feel that. Sounds a little low. What you think, Cody? Turn the sound up? I could try because I know how to do it. Oh, there we go. It's going louder. Yeah. Is Amazon down after hours? I had not caught that. Let's see what's going on over there, if that is in fact true. They're going to have 6 Prime days this year. They didn't. Apple and Amazon wanted nothing to do with the Live Golf media rights, so they apparently reached out to them. It's interesting. Interesting. It's down to $3 after hours. So is the market, though. So you're basically that's what's pulling. That's one of the things that's pulling down the markets even more after hours. Yeah. You love it. Sounds better? Oh, cool. Good. I don't have to try so hard. You didn't expect a 1% hike into the rest of 22. Is that in discussion? That's actually very, very likely. Yeah. You're going to see at least 0.75% next week, and then there are still October, November, there's one more before the end of the year. Maybe 2. Would they squeeze 2 in there? They're every 6 weeks. So I think that means there'd still be 2, one late in the year, very late. Hey, if the markets are down after hours, we're dropping below the past low, meaning we can fall back into those lower lows. In the futures market, yes. Little integrated systems talk here for you. In the futures market, you're closed right now, but you could be falling under the lows. But that would not affect people that don't trade the futures market. Remember, if you have stop loss orders in, you're not triggered based on the futures market. You're triggered on the opening price of whatever the instrument is. So the real impact wouldn't start until the open. Now, if the futures market was indicating that we were going to be lower and therefore the market was going to gap below that support area, you would have orders trigger on the open, various stocks and things like that. Probably a lot of people making decisions too. It'd be an above average volume on open type day. I don't know if we've spent a lot of time talking about that stuff, but I could ramble for hours. Yep. Nice. You going 1 point? Okay. Yeah. Where will the Dow be at the end of the year? I have no idea. You pick the most volatile year in nearly a generation to... no, I can't say that because of COVID. You pick one of the more volatile years to make that bet. Yeah. Facebook. Meta. You got to say Meta. Yeah, they don't like that. Hey, is there any reason why you wouldn't receive the full dividend announced? On a stock, no. On a limited partnership, you could. So it would depend on what the position you have is. Yep. Is there a guess the Dow? All right, man. We're gonna have to, figure that out. It's still there somewhere. It's hidden, but we're gonna have to make it public again. Yeah. Yeah, we don't have much reason to rally. I would agree with you there. I would also agree that I'll be back at 8 o'clock tonight in the dojo. So I will get ready for that. See you guys later for that. If you are a client and want to come join us, grab a drink. Come hang out, man. Be over there in the speakeasy. And if you didn't know, the speakeasy that's over there that you guys see, that's a decoy. We actually have another. If you ever come by the office, we have a speakeasy that you got to find. It's genuinely hidden, and if you find it, you get to enjoy the fruits of the actual speakeasy. That's pretty cool. All right, I got to roll. See you later. If you're joining me for later, grab a drink, come hang out. And the rest of you, I appreciate you watching, hanging out with us. I wish you a good rest of your day.